Hello, today is the 16th of July 2011, and welcome to today's analysis, or the weekend's analysis. We'll talk a little bit about silver and the dollar index, and we'll start with silver and the direction from the 50-day high and 50-day low. This chart uses the SLV shares, and it takes the last 50 days using the 15-minute time frame, and it finds what the highest and lowest point is. And then it can calculate its percentage move from that point. Therefore, when the $50 high was at 50 and the price of the market would say be at 35, then you'd be $15 away from the high. And when you're at 35, that means you need to go up about 40 some odd percent, which is why the blue line would have been in this area here. And when your 50-day low happens to be at 30 and you're at 35, then you're $5 above it, or 1/6, and thus you'd be about 12-13% above it. That's how this has been calculated. And many days has gone by from the crash at the start of the month of May, where now the 50-day high is the highs that were established late this week, thus making a new 50-day high. This is showing now that the buyers are in control of this market, but there has yet to have been established a confirmed uptrend using this indicator. We're looking for the third one on this chart. The first one occurred in here when the market broke out back in August. We established this resistance level. It's above the blue line, and it was breaking higher. The buying opportunity here was around $18.80 from what I can remember last year. And then again in here, because you established that you had this resistance level at around 10%, and then you had a nice little move above here. You have to establish the level, then a confirmation move higher. We've established a level, that's 18%, and it's above it, but even though it's above 18%, it still hasn't established some sort of clear breakout signal. I'd be looking for something to look in the area like, I don't know, something like this, where it does this, and then boom, now it's breaking out. There's your signal right there. That's something that I'm going to be looking for now in the next week. So we're now looking for confirmation of this breakout. I've been talking about this confirmation now for over 2 months, because 38.11 is this significant Fibonacci level that I've been talking about. It's been testing it. It's now above that level, which is pretty magnificent, but we still haven't confirmed the move above this level. If we take this level in here, which is a little above the 38, but it's a first resistance high back in the month of May, what's significant in here is that we came up to this level in here. This was the first time we've seen this level in quite some time. When this is the case, I usually think there's a good chance resistance will be found. And it did pop down just a little bit, which means whatever the percentage was, that resistance would have been found the first time that we were there in the earlier part of the week, or on Wednesday, Thursday. Well, the chances are now higher now that we get above it, or lower that we find resistance, because we've already been there, we've already bounced lower, and it's showing a nice little pattern of the higher lows and the higher highs. And well, things are going well with, of course, this move. The more often you test resistance, the more likely it is you are looking to take it out. And then on a break above it, you're looking to find some sort of confirmation above this line. The easy one that I like to see is when it breaks above it, does something, comes back, and now we can see we've established this resistance field, and boom, that's the type of thing that I'm looking for in a confirmation breakout. If this were to look something like this, you're in at 42, which is most likely in or around the area that you'll be buying on confirmation strength, if, of course, that's what you're looking to be doing. Okay, so that's enough for this chart. We'll now move on to the one of the last 15 years or so, and I want to talk about buying on strength, buying on weakness. Two different ways of doing it. If you sold here, you sold on strength, and I actually think buying on weakness, selling on strength is a better way to go, but that's my opinion. Most people don't like that, and quite frankly, I don't blame them. So if you're looking to buy on weakness, this entire run here was on weakness on the longer term chart. Within it, the buying on weakness came in here and again down here. And I say this entire thing was within it because, well, of what happened before. Market goes up to $50 in 1980 and it's already down 90%. So in reality, No, no, no. This is not just buying on weakness. That would be incorrect. No. Buying on weakness would be something like this entire thing, because we're still below that 50 level. The type of situation that I like to state is if you're buying on weakness and you're really starting below here, then the buy should last until you get a little bit above the previous high, because that's what you're expecting when you make a pattern of higher highs, is that of, well, higher lows. So this would be weakness, this is weakness, and all the way up here. And when you have a situation where the market goes up to 50, crashes back down, and now it's doing what it's doing now, this entire thing is weakness below the $50. As far as looking for different areas of buying on strength, looking for breakout patterns, and here we had a breakout. This was a 1997 breakout that really didn't occur. So now you're coming back, you're looking to get above it. Nope, didn't happen. And you established this significant resistance line at around $8. So where do you buy on strength? Right in here. Then again, you broke this resistance, you buy on strength in here. This one would have failed because you would have bought near the top. And then you buy on strength again, and you're looking to buy again right here. Now again, we've had this correction. We're looking for some sort of strength buy. That would be again above $50, or no, pretty much around $50. I think the whole point that I want to bring towards this is if you're one of the people stating I'm waiting to buy, but I want to pull back, quite frankly, I don't blame you, or didn't blame you. And now you got to pull back. So whether you're buying on weakness, well, you probably should have already been in at 33, 34, 35 because you've had so much time to get in at that level. Or you're looking to get confirmation of the break, and then that brings you back to the previous chart, probably around $42 per ounce. Okay, now let's switch this up to the dollar index. This is the dollar index going back for many years, or pretty much the entire chart. And the one level that I find to be very significant is this 80 mark. Because I've been talking about this for a while. How dangerous this would be if $80 is resistance and moving in a bear market below. Obviously, coming into this last little bit, we never were ever below this 80 mark. This level came something somewhat close in here. It touched, it touched, it touched, it touched. It broke through quickly, got a little bit above it, and then it's been in that whole area for the last few years now. Therefore, I'm going to shorten this out to the shorter term time frame, or just mainly show in here. Now this dollar index also as well, it's not the best index to show to track currencies because it's against other currencies, or how poorly a currency is happening to be devaluing. I think most people know that. I just want to point that out again. Now, as far as this trend line is concerned, I've talked about this earlier this year. It didn't find support at this level. Thus, it went below it, and, well, it just found resistance at it now. So I find that quite interesting. Now, as far as the $80 being resistance, we broke below 80 in here, and it started to go down, made its lows of 70.7. That's still the lows from 2008. You find a little bit of resistance at 80. So is this the first time we're going to find resistance at 80 and fall down? Maybe down here, but no, because it falls lower and goes higher. And of course, when it came back up to this 80, the chances of breaking it was higher because you were already there and it happened. So it broke above it close to 90. Then it came back to 80, pierced below it, but still support. And then it came back higher. This was big for it to find support in here, because you want to make the pattern of higher lows, and this would have been a higher low, but it didn't. Instead, it found a lower high, lower low, lower high, lower low. And it didn't find support at this 80 level. Rather, it went lower. It did find a higher low from this period in here. So you can say, okay, even though we made this lower low in here and this lower low, we can at least state we got this low with a higher low, or excuse me, higher high, higher low, and look at this. We got this, well, it's a matching high, but we'll establish another higher low and higher high, because hey, here's our higher low right at that 80 mark. Oh, well, that's fine, but now you just got to get this market up to 95 to make the higher high, and, well, that didn't happen, of course. Instead, it broke through 80, and here for the first time now, we have now found resistance at $80 and went lower, and pretty much have stayed lower. Because the only other time in the history of this market where it was moving higher and finding resistance at 80 was right in here. Well, it happened here. We're now showing signs where we may be finding resistance at the former support level, roughly around 76 or 77. And like I said, I've already shown this line in here. Things are not looking so good. Now we got this whole debt issue, debt ceiling, and the whole deadline for about a month from now. I like the whole thing of binary numbers, 1 and 0. Why I like binary is because it's a pure form of computer math, but it's yes or no. So now, are you going to raise the debt ceiling? Yes or no. One of the two is going to happen. So if we hit the 1 for yes, the debt ceiling gets raised. What's going to happen? Well, the debt ceiling will now be around 15 or 16 trillion. And we'll keep on doing the same old glorious things we were before. Many different people complaining and upset about the situation, as they should be. And then avoiding the problems we're having now. We'll get to them later. And well, silver and gold will probably still go up on this news. Now, if we hit the 0 mark, meaning, nope, we're not going to extend the debt ceiling, we're pretty much going to default, as we say, then that just means the dollar will collapse a little bit sooner, and, well, gold and silver will probably still go higher on the news. So whether it's a 1 or a 0, the same number is going to be the case. 1 for gold going higher, or 0 for gold going higher, whichever you establish 1 or 0 to be. And they were stating back years ago in 2008, 2009, even 2007, that by allowing this stuff to happen now, by not letting the market correct itself, that they're going to make things worse eventually later on down the line. Well, we're later on down the line now. So because we've already done so much, even if we go to the point where we let things default, then it's still going to be bad. But by raising the debt ceiling, in my opinion, it's even going to make it worse later on down the line. And I don't think it's much more later down the line. Final thing I want to talk about is sooner or later. Let me just get a long-term chart for this. So let me just get this one in here. I predict that the dollar will collapse sooner than later, and later than sooner. And I say this as far as the long-term chart, sooner than later. The dollar collapse will happen. It'll happen soon. I don't expect to happen 2015, 2016, anything like that. But you can expect it to happen soon, in my opinion, only my opinion, and it's calculated. As far as the short term is concerned, I think it's going to collapse later than sooner. Which pretty much tells me not in August, not in September, but with things going on the way that they are, I don't know if it's going to be this year, next year, but it's happening soon. For so many days, weeks, and months in 2008, 2009, I felt it was important to warn people about how currency is being created and that a currency is ultimately going to pass on. The days of warning are coming closer to an end, and really the wanting or the heart for me to go out and do these types of information about why the currency is going is just not there anymore. I'm now at the point where the warnings have been made, and it's now up to the people to decide how they want to make their financial and everyday decisions depending and based upon this. It's really up to everyone's self to do their own research, make their own decisions. But when you're warning somebody about these types of events, at some point they're actually going to happen, and they're in the process of doing so now. The warnings have been given. If anyone today is still looking to find this information out, thankfully, in my opinion, on the short-term time frame, this is probably going to happen later than sooner. But that's only on the short term. Take care.